Hello, good afternoon. Welcome to another ES Futures trading stream for today, Friday, December 6th. It is 12:52 a.m. G period is about to close. We are in the last third part of this period. The Russell and uh, the Dow has gotten out of yesterday's range. You have an inside bar here to the downside and a breakout to the downside. Look at this trade here, inside to the downside and the downside that follow the direction of the short-term trend. Russell it is being bought from yesterday's low, very questionable low here. The Nasdaq, man, that Nasdaq is really question this market here. Now just check this out, man. That looks like short covering here. Short covering weakens the market. That necessarily means that it's going to be that this is going to happen today, but look at these highs. How many highs you have altogether? 1, 2, 3, 4, 5, 6 highs, and all within a market that is making all-time highs. Right? Look at this high. This is a 5 minutes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 highs. You know how many stops you have there. If this doesn't have upside extension, okay, this may join these other indices. The ES, this is yesterday's range in the ES. ES has re-entered, has looked above yesterday's range, has re-entered yesterday's range, and it may target this low here, which by the way is very questionable. Value is still higher. Now we have value here yesterday, and today we have value maybe kind of like around this. The value is still higher, right? The question that I'm going to formulate now is, as POC is migrating lower, can these short-term traders get value at least inside or overlapping yesterday's value? If that doesn't happen, okay, got to be very careful here. So far, this is a trending day. This is a trending day to the upside. This upside movement that happened here can very well be a counteraction. All of this short inventory that we have here, this upside movement can be a counteraction to this overnight inventory. This is long overnight inventory, right? And after that, there's a nice selling, right? Nice selling that's happening. This is a trending market. This is a trending market to the downside. In a situation where all time frames are trending higher, the daily, all the major time frames, daily, weekly, monthly, all them trending higher. Markets making new highs, leaving non-excess highs up here. Okay, look at this. There is one to no excess high. But sometimes a market gets too long to keep going higher. That is to break for it to continue its upside movement. We talked in the morning about how the Dow was the index, was the weakest one relative to the downside movement, right? The one that has lower also the higher risk in the lower side, right? Because of the multiple highs at the all-time highs. But who cares, right? Who cares about that? Who cares about risk? Now check the ES here. This range here, range here, range here, range here. Every single time the market has a range, breakout to the downside, breakout to the downside, breakout to the downside, another breakout here, right? As long as this high or is not taken, this is still a market to the downside, right? One time framing lower. All my trades today, all my trades were to the downside. Unfortunately, I did have a short in this area, and I had to cover when the market was I don't know, but I don't remember now. I guess when the market was reaching 6100, I did not have push, right? Very low VIX. VIX is lower than, I believe it's lower than in the morning. Is it? No, it's higher in the morning because it's 1295 now. Net change. Oh no, it's lower because it was about 13. Really low, really low. Lower VIX. I was trading these options here, this 6085, because this is where I was trading yesterday as well. And we have this very questionable low from yesterday coming from POC, and it's also the overnight POC now. But before getting over here, the market has to deal with the 6100 and this area here. All right. Couple minutes before the market, before this period closes, want to see now what happened with this area here. It's right at the opening now. It's inside the spike, inside the overnight spike, still. The market is not just giving any, unless you have a good appreciation of inventories or market dynamics. It is not just giving us an opportunity here. Or at least that's what I see. Look at where that high is, where the H high. While it's a good high relative to that area between the 60.95 and 96, where I am calling support resistance, is right the hard back. And why I pay too much attention to these areas when market is selling? You know, when this kind of selling starts to appear, usually it's an indication that the laggards are finally entering the market. Now laggards are convinced that this market is going lower. Oh boy, I was buying the dips, but being stopped out every single time. Now I know the market is going lower. And it has been like that, kind of like all day long. Now, what can happen with POC here? If this market rallies from here above 6100, actually POC can be moved higher again. One more tick to the upside, and that POC is going to move lower. It just needs one more tick. Two things can happen here that can move POC lower. One is H going higher, or kind of like around 60, or at least above 60, 95.50, and another one which will move POC like 3 or 4 ticks lower, and the other thing is downside extension. Downside extension, but it has to be at least maybe 6 to more than 700 lower from the current low to move POC lower. To move HAL back lower, which in turn will also move POC lower. Very hard. It's not an easy day. It's not an easy day. My shorts were based also in this formation in the daily time frame, really high volume, another distribution here, and another one potentially forming in here. Not distributions are related to TPOs, but related to volume profile. There's one trade that, in the same way as I use TPOs or market profile, there's traders that use volume profile, right? You got these areas, for example, no? I'm going to draw it here, over here. Volume accumulation down here. Wait a minute, what's that? The speed at which it's moving. What was that? The speed. The first moving will probably slow at the divided position. Okay, the market is pricing maybe 3 rate cuts for next year, and probably one this December. Okay. We have these market profiles like these ones, right? And you have someone here as well. We have two. If we join these 2 days, we have something like this. Right? If we join this to this, we have something like this. And what pros do is, you know, this is kind of nothing to do area, dead zones, and this is when you place your bets here in these areas here. If the market is having an upside or downside movement, this is an areas to support resistance. And if the market re-enters this area, for example, there are good odds, for example, but you have to be seen in context, right? You have to be seen in context that this, once the market re-enters this area, it can detect this to the opposite side. This is a targets or profit takings or whatever, right? And the rules that they use are reapplied here, because you have another one here, right? Coming in here, because what can happen here is look below and failure. If it doesn't move to the downside, it fails and re-enters this one, it can very well target this one here. Well, right now we have this. It's no good, and remember where this H came. Right? Where do you remember? Was here exactly how back. An indication of ladder, and now the action is to the upside. It is 1 p.m. I won't consider this early in the session. I won't consider this being early in the session. There could be some rebalancing here. If this is a trending day, usually there is some kind of rebalancing that happened somewhere a little bit past mid-session, and before the closing. You never know what's going to happen, if it happens at all. Now these highs, look at Nasdaq here. These highs, we were talking about these highs, right? Were we? We have also the ES. Look at these ranges here. Ranges here. This 1, 2, 3, 4, 5 highs. 1, 2, 3, 4 highs. 1, 2, 3 highs. Right? And in between them, the 6100. Very, very hard market to trade. Let me know what's your experience, because it has been hard for me. Look what happened to POC. POC was moved lower and then was moved back higher again. Yeah. When POC reached D low, it moved lower, but as it reached E low, it was moved higher again. But it is migrating. It is migrating lower. Now, H high, look at that high, man. That's no good. 6110 calls 1 point. But check it out. What happens to POC here? I'm going to put POC. This is the beauty of window trade. Dynamic or dynamic. POC and value area. Look what happens to POC. This is the red, right? I mean the yellow. Goes higher a little bit and then goes lower. Boom, lower. Where POC is? Where it was yesterday. What happened to value? Look where value was. Look what's happening. Each period. Each period. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Now by the period, this downside movement, this upside movement moves POC from here lower. It's very counterintuitive, right? How an upside movement can move POC, can move value lower. The 6100 is an important reference here. Now the Dow has a challenge here, moving the market back inside this range. The Nasdaq has found support around yesterday's high. Now we have a squeeze here. You got to be very careful here. Very careful when taking shorts. The page was just the green into the downside. I got some notations on my trading journal, zooming in, some zooming out. Right, the short side is getting risk. The risk in the short side, in the short side is getting higher. I'm going to that market's making new highs and traders selling from those highs. This is it's giving you chills, man. Kind of like has to be a warning. Some tickling there. Value is higher than POC. This is two pieces of information that contradict themselves. Value higher than POC, but POC moving lower. Risk is high in the short, and this is just 30 minutes after I wrote this. The risk in the long side is even higher. Okay? POC can be moved lower, which it did. If the current downside movement continues, POC can migrate lower. I'm going to reassess the type of market we are having today. A trending market to the downside, with all time frames trending higher except that intraday. Today's end is end of the week. This is key as well. End of the week, it's not unusual to see shorts being squeezed or longs being liquidated when the market gets too long or too short during this end of the weeks. It didn't happen at the end of the month, remember. It did not happen at the end of the month. This may happen, this is what I'm thinking. Since we haven't seen anything during the end of the week, which is still we still have to see, or end of the month, which we have already seen, this may be the case when the quad reaching there can be something there, right? Or when this contract expires in about 2 weeks. I believe this week is the last one, in which this contract is kind of valid, will start to wind down next week, and I would consider this just short-term trading, seasonal short-term trading here. All right, and I still consider this valid reference, this area, 95, 96, really valid area. The market is paying attention to this area here. This very questionable low here also has a non-revisited is a non-revisited prominent overnight POC. This area as well is support from this day. Okay. What is 6181? Oh, I call this low here. What was this? Oh, this was daily holdback. Daily holdback. All this movement came exactly from holdback. And every single, this one and this one also from mechanical. Every single one after that from mechanical reference. And it was all corrected yesterday. I hope you have a good day. Hope you have a good day. It has been a tough day today. Really tough. The tempo has been very low, very slow on the lower side. Okay. Look at where this high is. It's right at the low or the upper distribution. If you check volume profiles, that's what it is right now. That's where you hedge or pros take profits here. Alright? Right there, at the low of the upper distribution. Remember when we talked about this just minutes ago, right? This kind of formations here, which is what we have here, right? Just look at this, right? You have put a line here. I'm going to erase this. You have put a line here, which is this one. You have a nice taper here, something like this. Really nice taper on the upper side. Price, and another one comes down here. Right? About the same high as this one here. Same height, really small one. Range wise, okay? And then we have lower here, a lower section here. This is excess. These are the extremes, right? Now the market is re-entering this range. It's leaving this one. This is when you take profits, hedge, or maybe place your bets. Right? He's re-entering this, in this can target the opposite side. It also can be if there is no penetration of this range, especially after having this huge volume here, and the market doesn't get inside this volume here and comes back inside this one, you just reapply the guidelines. But trying to do this as how can I say this, mechanically, saying, okay, I'm going to go short here because of this, right? It doesn't work like that. Trading is not like that. You always have to put context in trading. You always have to see where the market is and see what the market is doing and try to understand what the market is doing at this moment. As the market do what it is doing, what it does. Going long or short ball just because it hits 6100, it is not enough. In the long term, it's not going to be sustainable. If at the beginning I have some success doing that, it's not going to be sustainable. It doesn't work unfortunately, it doesn't work like that. If it work, right? Just think about that. If it worked, it would have been done. Right? You just can build a program to sell or buy from any mechanical reference and period, and that's it. It doesn't work like that. Unfortunately, there is more depth on trading. There's a lot of things that we have to do in trading than just going long or short from value area high, value area low, POC, hard back, low of the day, overnight low, overnight POC, overnight low. That's the short term. That is the shortest time frame traders approach. Right? Statistically, it doesn't work. Yeah? Most of the short time frame traders, the shortest, get run out of money in the first 4-6 weeks after they start trading. That's it. Right? Less than 5%, and 5% is being generous, are successful. Because it's not a mechanical, this is not science, this is not a science, it's not a mathematical. There's not a formula to trade. It is a constant, it is a journey, it's a constant evolution. It's a business when everything is changing all the time. And we need to adapt, to be flexible. To adapt to the markets. Now here is another thing that I am starting to observe. Before that, let's do something here. Look at that. This is a nice range here that has been taken out here. And look at this, it happens all the time, right? Look below the range and then boom, we have higher this range here. Now I'm going to extend this to the right, taking this trend. I'm going to duplicate this and move lower. If I got anything. Do I have anything here? Or maybe I have. Come on, man. Come on. Look. Look at that. Gosh. Okay. This is just this gives me an idea, right? Who is here in this market right now? It hasn't changed. There's no change in this. It has been like that yesterday, before yesterday, last week, last month, last couple months, last quarter. It has been like that. There's no change in that regard. And I forgot what I was going to say. What I was going to talk about? Oh, about POC, right? If HI, we are kind of like a 5 minutes, no, 7, 8 minutes before I period. If I period trades somewhere between this high and somewhere between this high and this one, POC will come back higher. But if this range have upside extension, okay, and takes this D high and opens above here and keeps going higher, POC will remain here lower. Right? Where is the thing? And that's just one scenario here. That's just, yeah, I am constantly doing that. Right. This is what I'm saying, what I'm talking here. If I opens above this, where, above this level, right? No, above this, and doesn't trade below this area here, POC will come back high. Alright, which is a positive. But if it keeps going higher, taking previous day high, correcting this one, and the next period opens above this high, and the profile has upside extension and forms a second distribution up here, single tick second distribution, POC have good odds remaining lower, which, oh, coincidence, right, is the same as yesterday. I am carrying this day here. No, actually, POC move high. I was considering this day weak, but now I missed this. During this day, POC moved higher, and during this day, even though value went lower, POC moved higher. It was migrating lower, but it closed right where the previous day was. Can you see the pattern here? It was super risky to be short here in Nasdaq. One of the, when you are low enough in any business, you start to, I got another business, I do remodeling. You start to know your customers. You start to know your business. That's something, unless you may have a job as well, right? And you start to know your job. At one time, at any given time, becomes repetitive, and you kind of like, what's kind of like know what's going to happen. You don't expect nothing. I am personally, I can't stand those kind of jobs. Right, I have a good job. I had a good job. Basically, settled. If I would have stayed, I was settled for life. But I just couldn't stand the job, man. It was so boring. By law, I was in my country. By law, I couldn't be fired. I have 17 What is this? 17 remunerations a year, monthly. Usually you have only 12, right? Because the year has 12, but this company has 17. Can you imagine that? You have one extra in January, another extra in July, another extra in December because of Christmas, because of New Year, because of Independence Day. You have another one because of your birthday month, and you have another one because of vacation. You just can't. That was crazy, man. But you just can't. And the remodeling business is quite the opposite, right? There is always something new. And this business, this trading is just like that. There is no 2 days that are the same. You have to be adapting, molding, finding, trying to figure out what the market is doing every single day. Every single trade that I made, that I do, has nothing to do with the previous one. Yeah? And we have nothing to do with the next one. That's the reality of this business. Today I felt like I was over trading when I took a short here. Actually, right now, how many trades I have? I have 8 trades. All of them to the downside. I haven't done nothing here. Here I haven't done anything here. And these trades, because we're against, you have seen maybe 2 in the morning, because of the way how they were structured, these trades have to work fast, right? And they are not aimed to make to home runs because of the context, right? Because of the context here, what's happening here, what happened early today in after non-farm payrolls relative to yesterday, level to the whole week, right? All those things. And this market don't want to leave. It's trading in this range, like, you know, you're short below, and I mean, I have seen this in these markets. You know, there's nothing below, maybe somewhere within 7-8 points below these round numbers, and 7-8 points above this round number. Once the market leaves this is when you have something. Either look above and failure, look below and failure, which targets the opposite side, or upside continuation of the movement. Okay. Look at that. Look at what happens here, right? Look at what this downside movement is doing. It's moving POC higher, a little bit higher. What it is right now. Very, very short time frame trading here going on. Exactly. What happened when the market was being sold from halfback here. Now it's being bought from halfback. Oh boy, I was right all the time when I was buying here. I was right. Let's do it. After I was stopped multiple times here, now I got it. Right now I know it's going to come back up here. You know, this is terrible location for anything here. Location is terrible here. I don't have location here for anything. Neither the upside nor the downside. I could very well use a coin, the toss of a coin, to know what should I do here. Should I go long? Should I go short? Heads. long, tail, short. Those are my odds here. That's not good for any kind of trade. All right. Unless you have any questions. Oh, look at this tree. Look at it's okay. After checking this channel here, look at what happened here. You know, goes out of the channel, comes back. What can happen here? Can it target this low? This is a pop. We have nice X's. Do we have X's? This is a nice X's. 60, 68, 8 point X's. Not bad. But it's not having, you know, this quick downside movement, which be a sign of rejection or higher prices. Coming back inside this range, again targets the opposite side. Just, you know, you just reapply guidelines over and over. No? But that's a short-term trading, short time frame trading here.
Lazima tuchome venga chakike venga chakike chakike.
This Monday, 60.85. This one's. I guess the high was 10 and the low 4.2 or something like that. Pay attention to where I high is. POC is becoming wider here. JKLM. We still have 3-4 more periods here. Moving or creating another distribution down here will keep POC higher. Value, however, can become overlapping here. Remember when we were talking about where potentially I can open, right? Opening it when? Do I still have that? No, I don't have. It went from potentially open inside here and shooting its way higher, which would have moved POC higher. That didn't happen. It actually opened and traded in this area, which is making POC wider. Kind of like joining, or making this POC wider here. if I join, guess what kind of profile we may have if I join this and this, right? That would be a very wide POC. Something similar to this, but now, maybe kind of like more like this, but now, in the daily, this is overnight, and this is regular trading hours, both of them. Most of the time, what we do here, we are just thinking about these things, you know, what's happening here. This overnight inventory. This was short, this was a rebalancing of that inventory. This was short, so pretty much not existing now. But there is a good amount here that could have been long as well. That is wide POC at yesterday's low here. I like to talk about these things, you know, not to trade from these things. The fact that I talk, you know, it makes easy to remember. When I talk about out loud about these things, and not or write about these things. You know, the brain you create a memory doing that. You create a memory, and your brain store those. You know, it is easy to be stored when you talk or speak, because you are materializing those thoughts some way, not just by thinking, but putting it in words, you know, either verbal or written. And then those ones can be remembered later without you having to do any effort. They are just in the background. That's part of me now. This market can come all the way up to here, or may start doing something to the downside, and I have something. I may have something from this day. What I have from these days, for example. You know, this is. Do you know what happened here? This is the holidays. This is the holidays. This is Thanksgiving, so short holiday during Friday. Short covering days. Let's put this together. It looks very much like short covering. Right? Uh-oh. Look at that. You know? Short covering. Very wide POC. Look at this. A wide short covering, because look at this. Single prints here. You know, it does have upside. No, it doesn't have upside extension here. No, this is value area and it just stays there. It doesn't have, however, right, excess. The chart that you have seen includes the overnight. I don't like when window trader does that. I guess there should be something here that allows to join just the daily sessions, excluding the overnight. Not much to see to be said here. I still will keep this area, this 95, 96 area as support resistance. It is obvious the market is using that area as a reference. And this upside spike from today overrules this from yesterday. This spike to the downside was rejected. Lower prices were rejected, and higher prices are being accepted here. Right? If I look a little bit further, if I expand my look, expand my view, I have a spike here from yesterday, from the day before yesterday. Have a spike here, with this being the base. Most of this trade above the spike, and today's joins this. So these higher prices are actually being accepted. This spike is, as you know, the market doing this and doing this is accepting this thing. On top of that, we have this overnight spike. So we have two spikes here. It doesn't mean that the market is not going to break. Everything has to be seen in context. Remember that, you know, all of these things showing the risk on the long side is very, very high. Let's check now this trend here, this channel, right? Now they are selling from this. They are selling from this. Can you see selling from this channel? Repeated behavior here. It's an indication who is in the market. When this thing, the easier is to identify something, the higher the odds, right? The higher the odds that the dominant time frame participants in the market is the shortest. You know, it's the shortest time frame traders. And this is not easy to see. No, also there is more bigger time frame participants here. Now you have this low here, questionable low. This is re-entering this range. You know, balance guidelines are applicable again. All right, guys. Unless you have any questions, I am going to call it a day. I wish you a wonderful rest of the week. Stay safe. See you next week. Bye-bye.